Joining us to talk about what we can expect tomorrow, James Wang, analyst at ARK Invest. So the stock has had a pretty nice run-up into earnings tomorrow. What will be the keys for whether this can continue?
I think people are going to look for a reliable iPhone, but mostly importantly, the services segment. That's where management's been guiding kind of analysts on how to think about the company going forward. They redid the whole disclosure, so it's around hardware and services only now. And we really want to see sustained growth and maybe some margin improvements for services.
When that happened, what sort of level of total revenue does that need to get to for analysts to correctly reward that part of the growth?
What's interesting is it's not just about revenues, it's about gross profit. Last quarter, they had this very interesting disclosure, which is services is something like 20% of revenues, but about a third of gross profits. When something like that happens, I think we're already at the point where people are doing more sum of the parts valuations and giving that a much higher multiple than usual.
One of the points I think you're hitting on is that longer term, Apple's position in health monitors, smartwatches, devices, things like that might be more important than the iPhone.
That's
Why
right.
would that be?
Well, if you think about how the iPhone succeeded, right, the initial point of distribution were these telcos, AT&T, T-Mobile, and these companies really helped distribute the iPhones and give subsidies so that people could buy them without that sticker shock of, oh my God, I'm spending $1,000 on an iPhone, which is what we get today. That seeded the market. When we think about the watch, we're starting to see that happen, but the subsidy and the point of distribution are now the insurance companies. Aetna and United, these companies are striking deals with Apple to provide subsidies for the watch. So the watch could be much cheaper from a perceived sticker price. And for an older population, I think it could become an essential item because it actually prevents health issues. So
clearly services have been the bright spot. That's where the double-digit growth is. But you've got slowing iPhone growth. But you've got sort of questions around China, the currency impact. I mean, is the stock priced for perfection now that we've seen, what is it, a 30% plus run up so far this year?
I think near term, the price is pretty reasonable for people with a short-term kind of view on the stock. I think it's really important to think about, why do you own something like this? You could try to trade around some of the controversy, but for Apple, I think the bigger picture is they're becoming, as they approach 1 billion people of installed base, the last time was like 800 million or so, this is really becoming a company that is a content and software distribution platform. And I don't think people truly appreciate the magnitude of that power.
What kind of valuation should it get?
I think it could easily be worth twice of what it's worth right now if you think about the markets it's entering, right?
That said, on the numbers of the content distribution platform that you said, is there an execution risk on that versus, say, a Disney Plus, where we know this is their bread and butter to deliver great content?
I'm glad you recognize Disney Plus because that plays into Apple's strategy. Apple doesn't have to do all the heavy lifting. Yes, they're doing some first-party content. But if you look at what's going to happen in media, streaming TV media over the next 5 years, all these platforms, whether it's Disney or CNBC, they're going to have to come online. Netflix is eating their lunch, right? And when they come online, they're going to have to go through the Apple's App Store. So Apple collects a 15 to 30% revenue cut from all these companies. If you think back to the 90s, Microsoft was supremely successful, but it did not collect 15% of Adobe's revenues. Apple is in a uniquely powerful position here, and it's going to collect revenues from music, from gaming, and from TV.
James Wang, thanks for joining us. Very positive, bullish perspective on Apple.